Good morning, everyone. This is Mike coming to you on this nice Friday before a nice weekend that we can all look forward to. Wearing a little bit of green, a little bit of red, because that's kind of what the market's doing today. I'm going to hit on three quick topics. One is a little bit of information on future Fed rate cuts, not from Chairman Powell. And then I'm going to talk about exciting new releases from Meta as far as glasses. And then last, kids and grandkids and Roth IRAs. But as I get started, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. So let me get started. Usually I'm here with somebody, but today I am by myself. Just a real quick glance at the markets. You can see the Dow's in the green, the S&P's barely in the red, the Nasdaq's down a little bit. So nothing too exciting right there. So I'm going to jump to the next part, which is, earlier this week, Wednesday, Powell kept the rates the same as expected, changed the language a little bit. The markets didn't really react much, so which is fine. But anyways, Fed Governor Waller comes out and says they could cut the rates as early as July. So I'm sure Chairman Powell loves this. It's part of the team's off talking about this, and that gets the markets, makes news. Anyways, is this good news, bad news? Certainly the stock market, if the rates get cut, will consider that good news because then money is cheaper to borrow and invest. And that would also be a sign that the economy is slowing and inflation is under control. So we'll see. Another piece of news that I thought, and this is very exciting to me, but anyways, Meta and Luxottica, which I have at one of their offices just down the road from me, unveiled Oakley smart glasses. They already had Ray-Bans. And anyways, smart glasses, I believe, are going to be, if you like the watch, if you like the Apple Watch and some of that, I can see some uses for the watch, but for glasses, I see a lot more utility for glasses. So I'm excited to see where these go. I've been looking at, anywhere from the Ray-Ban Meta, which, can use AI. You can talk to it. You can hear a text message, has some things, to some other glasses that are already on the cutting edge and released in 2025. I think X Real was one of them. And I mean, they have full screens that you see within your glasses, pop-ups that, can AI can give you information. And I mean, these are just the beginning. I can't even imagine where we're going to be in 2 or 3 years. But these are just, not all these companies are going to survive. So we're not saying go out and invest. But certainly when Meta and Luxottica are involved, these companies are going to do well. So very excited about that. And then the last topic I'm going to talk today about is some advice. And I just had this conversation with someone this morning, but I have this quite a bit. So we talk a lot about Roth IRAs, but what I want to talk about is Roth IRAs for your kids or your grandkids. We talk about ways to pass wealth on, pass investing knowledge, and one of the best things that you can do for your kids or grandkids, if you have the money to do it, is to teach them the Roth IRA, and you may contribute a little bit to help them, to get them started. So one requirement is the kid or grandkid needs to make some money. They have to have some earned income. They can't be 2 years old and you're putting in 7 grand a max. Which is the most you can put in right now, $7,000 for that kid. So the first job, working McDonald's at age 15, let's just say they earn a couple thousand in a year. You as a parent or grandparent can open up a custodial Roth, put that in, and basically the money is already has tax paid on it. So what that means is that money will grow in investments, and someday, hopefully when your child, and who knows whether you're still around, but your child is 60 years old, which is hard to even conceive, but 45 years of compound interest or compound returns can grow that they will not pay tax on the gains. They will not pay tax on any part of it. So it'll go up in value. They won't pay tax. What will be the tax rate in 40 years? We have absolutely no idea. It seems like it's going to be higher just because it seems like taxes tend to go up. Although that's not totally true. They have went down at certain points, but we have no idea. So, and then as your kid, especially when they get to the point where they're on their own tax return. So let's just say they're 20 years old, they're making $25,000 a year. Their federal tax rate is 0%. They contribute to a Roth IRA. They are paying tax on it of 0%. So basically, they didn't pay any tax on it, and then they won't have to pay tax on it in 30 or 40 years. It is a great way to give money if you're like, I want to give my 20-year-old some money to help them out, but I don't want them to just blow it, which just so you know, the account is in their name. So they could take it out and blow it if they wanted to, but hopefully they don't. It is a way to do that. One thing I will give you a piece of advice. If you're going to contribute to them, please let your kid put some skin in the game. So this is what I've done with mine is I've matched some money. I've had them, but if they have some skin in the game, then we can more accurately assess their risk level. So guess what? If we say what's your risk level and it's all your money and not theirs, they're high risk. Like I got nothing to lose because I didn't put anything in. But if they put some of their own money in, it feels much more like, okay, now I know what it's like to be in the stock market, see investments go down and up and down and up, and we can assess that. So anyways, that's just some advice. It's very easy to open up a Roth IRA for your kid, grandkid. Just let your advisor know, and we'll be glad to set that up for you. With that, thanks. Have a great weekend. We'll talk to you later.